So the Dow Jones up 287 points yesterday. Intraday actually reaching over 400 points. I was very tempted to sell Amazon. It went up almost 5%, but because I bought at 15.15, I was actually up close to 17% with a $500 profit. So I was really tempted to sell it because I felt like the alternative would be to wait till next quarter results and hopefully it reaches $2,000. But at the same time, I know that anything can happen. The market right now is very easily influenced by anything that comes out of the central banks or Trump. Basically, any news is affecting the stock market very easily. Would not want to miss out on decent profits, 17%, $500, and also in about less than 2 weeks. And today, pre-market, it's already down 1%, but usually that could change. We'll see what happens when the market opens. But yeah, I was tempted because I wanted to confirm my profits. Some profits right now is better than more profits in the future. That's just how I see it, because I tend to be impatient. And also my experience showed me that, well, actually, I've seen both scenarios. I mean, often I sell a little bit too early and then I regret selling too early because I would have made more profit if I had kept it longer. And I also see the opposite where good thing I sold because if I didn't sell, the stock price dropped and I would have missed out on profit. And sometimes it drops more than my initial purchase price. So I could have sold, made some profit, and then bought it back at the same price I bought it initially. But I mean, Amazon, most likely, Amazon's going to continue to go up unless there's a major crash or major correction. But Amazon alone just going down like that, is unlikely right now. And plus, Amazon doesn't pay dividends, so there's really no benefit to keeping it long term. The only profit you'll make from it is from buying and selling the stock. I don't know. We'll see what price it reaches today. Also, MasterCard, I'm up 15%, so that's another stock I'm tempted to sell. I wish I had put more though in MasterCard. I only put in $1,000. Amazon I put in, I believe, 3,000. But yeah, MasterCard is another one I'm tempted to sell right now because I'm up a decent amount in a very short period. Although I trust that MasterCard in the long run will go up, but why wait longer for a little more gain? See, it depends what my alternative is. If there's something else I want to buy, so if I could sell, take my profit to buy something else that's cheaper, then yeah, most likely I'm going to sell. But right now there's nothing really that I want to buy except for General Mills. I mean, it dropped close to 52-week lows. Actually, it is at a 52-week low. But yesterday's low was 41.06, and I think last week it reached 41.01. It pays 4.5% dividends. It's got a one-year target price of 47, price to earnings ratio of 11.55. So I've got an order on this actually at $41. Kellogg's also looks it's a good one. Kellogg's, but around $60, I'd be more interested. One-year target price of 68, 3.5% dividends. So these are companies that you know aren't going anywhere, but you don't know what the lowest point is. It might drop a bit more, but definitely looks attractive at this price. So I've got like 9 stocks in my portfolio here in my margin account that I'm tempted to sell just because they're all pretty close to my 10% goal per trade. I've got 3 of them that are above 10%, but Bombardier I can't sell because I've got covered calls on them, so I have to wait till December 21st. But I've got Amazon and MasterCard that I could sell. Then I've got Blackstone, TransCanada Corp, ExxonMobil, Qualcomm that I could sell as well. But I'm too curious. I want to see how much more I can get from them. I'm also considering Activision Blizzard, video game maker, trading at a 52-week low. Doesn't pay much dividends, but it's got good capital gain potential with a one-year target price of 73. It's got 35 billion market cap. If you look at financials, revenue is increasing since 2014 from 4.4 billion to 7 billion, so a very good increase. Net income isn't so great though. As you can see, it dropped from 835 to 273, so they made more money, but they didn't net as much as they should. So usually when a company is making good revenue or the revenues are increasing like that, it's a good sign, of course, but they still have to fix their operations because at the end of the day, it's profits that matter. But I mean, it's a good problem to have when your revenues are increasing and you just need to manage your expenses in order to increase your profits. So I might put an order on Activision Blizzard today. Also, I was considering Power Financial Corporation yesterday. It's at a 52-week low as well. It pays very good dividend, 6%, but it doesn't have great capital gain potential though. And who knows, can't tell if it's the lowest point either. It's actually at a 5-year low, so that's kind of cool. But wish I knew what's actually making the stock drop. But it's a pretty great and safe Canadian stock. 19 billion market cap with 6% dividends per year, and it's at a 5-year low as well. So this is a stock I'm considering. but this would be more for a long term. Power Corporation of Canada as well, same situation. 5-year low, close to 6% dividends per year, 12 billion market cap. They have pretty low PE ratios. 1-year target price of 30. So if we look at revenues, they've been going up. Last year they made 51 billion, but their profit is 1.3 billion. So actually it's not so bad. Financials aren't so bad, so don't know why it's dropping. 445 billion assets versus 400 billion cash. So yeah, their debt is pretty high. Almost a 1-to-1 ratio between assets and debt. Keeping my eye on CIBC, one of the biggest banks in Canada. I mean, it reached 110 yesterday. It's a 52-week low. Pays close to 5% dividends. 1-year target price of 128. Well, banks in general just go up, so unless there's a crash, of course. But in general, bank stocks are very safe. So if you can buy them low, it's usually a good deal. So if you look at the 1-year chart, you could see that it's gone up and down twice. So the lowest point in the last year was $110 and then reached 120 about 6 months later. Now it's dropping back to 110. So giving you another buying opportunity. So last 5 years, you can see it's on an uptrend, but a very steady uptrend, not like MasterCard or Visa. Look at MasterCard in the last 5 years, straight arrow. Square just keeps going up, pisses me off. I'm trying to buy it at around $50, but it just keeps going up. Interesting stock. Not sure if I'm going to buy at this price, but definitely an interesting stock. I'm also considering CI Financial. Not doesn't have a high target price, but pretty safe financial institution in Canada with 3.5% dividends per year. So this would be more of a safe or boring stock, but considering it as well. So Cenovus Energy went up 12% yesterday. So this is a stock that I had 75 shares of, and I bought 25 shares last week at around $9.15 just to have 100 shares and sell covered calls on. So I sold covered calls on them last week at a strike price of $10 and I sold them for 30 cents. So this has surpassed so the stock price here has surpassed my strike price plus the premiums from the options. So there's a possibility that my shares get called away, meaning that I'm forced to sell it at $10, which is not something I want. I wanted to keep the shares and just keep selling covered calls every month to generate a yearly return of about 20% just from the call options. And it's got a 1-year target price of 15.65. I actually bought it at 15. Most of the shares I bought at 15. So yeah, I wanted to sell covered calls every month until the stock price reaches 15 so I can recover. But it looks like I still own the shares, so that's good. I still got 100 shares closing at $10.50 here. So yeah, so I still have my shares, that's good. And I still have the premiums that I sold. I sold them at 30 cents, but they're worth $1.21 today. Yeah, so these are the stocks I'm considering right now. And I'm very tempted at selling Amazon just to confirm my profits because I know market is very volatile. I wouldn't want to see Amazon drop below 1700 again. I mean, with yesterday's rally, my portfolio is already up $1,600 from Sunday's video. So I know that's not going to continue. So that's why I'm very tempted in selling and confirming my profits. And then I'll have available cash to buy something else. If the market crashes, then I'll definitely have opportunities. And even if the market doesn't crash, there's always other stocks that drop. So that's why I'm tempted in selling Amazon and MasterCard right now. We'll see what happens today. All right, if you have any questions, leave them in the comments below. If you can open an account with Questrade, use my referral code in the description below the video so you can get between $25 and $250 back. Thanks for watching.